The Fibo trap strategy is a reverse strategy whose goal is to identify the end of a correction and enter immediately when a new trend begins. This strategy is suited for time frames of 15 minutes and up, where the bigger the time frame, the higher the level of precision. This strategy is suitable for all currency pairs, commodities, indexes, stocks, and futures contracts. Indicators used: Fibonacci, relative strength index, stochastic oscillator. A preliminary buy signal is received when the following three conditions are met. The rate is correcting a previous trend in a downwards direction. A candlestick appears which goes below the 61.8% Fibonacci level, but then reverses and closes above that level. The stochastic index signals a buy by the crossing of its averages, but is still under the 50 line. A preliminary sell signal is received when the following three conditions have been met. The rate is correcting a previous trend in an upwards direction. A candlestick appears which goes above the 61.8% Fibonacci level, but then reverses and closes below that level. The stochastic index signals a sell by a crossing of its averages, but is still over the 50 line. Enter the trade after a new candlestick has opened following the candlestick that triggered the signal. The position will be realized using the RSI indicator. In a long position, the position will be realized when a candlestick closes where RSI is in the overbought area, that is, above 70. In a short position, the position will be realized when a candlestick closes where RSI is in the oversold area, that is, below 30. The stop loss should be set 5 pips from the signaling candlestick. Add the Fibonacci indicator by selecting Insert, Fibonacci, Retracement. Place it on the wave in the center. Double-click it in order to select it, and right-click in order to access its properties. In the Fibo Levels tab, keep only the 61.8 value and change the color to black. Add the stochastic indicator by selecting Insert, Indicators, Oscillators, Stochastic Oscillator. Under the Parameters tab, leave the default values as 5, 3, 3. Under the Colors tab, change the line style to Continuous, and in the Levels tab, set the level as 50. Change the line style to Continuous, and change the color to black. Also, add the Relative Strength Index indicator found in Insert, Indicators, Oscillators, Relative Strength Index. Under the Parameters tab, configure the period to 4, and under the Levels tab, change the line style to Continuous and set the color to black. In this example, we review the strategy in the Euro-US dollar currency pair in a one-day time frame. A buying signal will be received as seen here, where the rate corrects the previous trend in a downward direction, and a candlestick appears which is below 61.8%, but then reverses and closes above the 61.8% level. In addition, a crossover occurs between the averages of the stochastic oscillator. The position should be entered at the start of the first candlestick that opens after the signal. The stop loss should be set 5 pips below the lowest value of the signaling candlestick. Exit the trade when the RSI indicator is in the overbought area, meaning its value is above 70. In this example, we test the strategy in the Euro-US dollar currency pair in a 4-hour time frame. A sell signal will be received as seen here when the rate corrects the previous trend in an upwards direction, and a candlestick appears which goes above 61.8%, but then returns and closes beneath the 61.8% level. In addition, a crossover occurs between the averages of the stochastic index. The trade should be entered at the start of the first candlestick that opens after the signal. The stop loss should be set 5 pips above the highest value of the signaling candlestick. Exit the trade when the RSI indicator is in the oversold area, meaning its value is below 30. In this example, we would have earned 75 pips over a period of 4 hours. Good luck!